Hi everyone and welcome to episode 82 of the Rewarding Property Decisions podcast. So we're finally starting to see a bit of warm weather around Melbourne, which obviously means spring is in the air. Footy finals are around the corner, not for my team. Essendon let me down again this year, but I promise you I'm not bitter. But hopefully things will start to change. But obviously that means from a property perspective that the market is really starting to move. The supply picks up this time of year. But what we also tend to find is that it's a good time to have a look at how the market's progressed over the past 6 to 12 months and potentially going back as far as 18 months. But also, therefore, is that going to give us any indications as to what the market might do through the springtime? And I always find that one of the best areas to start in terms of looking at that is to have a look at the supply levels, demand and supply, but firstly to look at the supply. And obviously the auction numbers in Melbourne is a big indicator of that. So we tend to go and have a look at how the auction numbers have been through 2023 in this instance and compare them to what has happened in 2024 thus far and perhaps what that might indicate to us that could happen through the spring. So looking back at 2023 and comparing that to what's happened in the first sort of 7 to 8 months this year, and it certainly shows that the market in terms of supply has improved significantly. There's a lot more property on the market. From looking at statistics from CoreLogic, the average weekly auction numbers are up around anywhere between 17 to sort of 37% per month. So it's showing you that the supply levels are really, it's quite substantially higher this time of the year compared to last year. So it's something to bear very much in mind. It hasn't really impacted values at this stage. The values have still seem to be ticking along reasonably well. But the interesting thing then, as I said, is to compare it to the demand side of things. And we need to look at how that's going to be influenced when the supply levels are obviously significantly higher than what they were last year. In order to determine that, we tend to consider what the clearance rate for the auction results has been over the past couple of 18 months or so. And certainly through 2023, the clearance rate held reasonably well. The market wasn't, as I said before, wasn't moving significantly in terms of growth from a value perspective, but the clearance rate held fairly firm for the majority of the year, certainly leading up to sort of October, November. The clearance rate was in the early or circle around 70 to 75%. And as it does typically do once you get into the back half of the spring and leading into Christmas, so that November, December type time frame, it started to pull back and it moved back towards the sort of mid 60s. Now, leading into the start of 2024, we saw that it started off really well, which is again what you tend to find. There's that pent up demand over the Christmas New Year period where buyers don't have a lot to choose from. And it started off quite well at the start of this year and again held up in that sort of early 70% type mark. But it's come back quite quickly with that extra increase in supply that we've seen. The clearance rate has definitely come back down into the early to mid 60s. So, which is not a great sign given that, as I said before, the supply is usually good through the spring and we've been up on last year's numbers. So you would expect that we're going to be up on them again going into the spring market this year. So from a vendor's perspective, you're likely to see that there's going to be a reasonable amount of competition for your properties if you're looking to sell in the spring market. But from a buyer's side of things, that means opportunity from my perspective. And I think if you are going into the spring market looking to purchase, I'd say there should be some really good opportunities around. And it sort of feeds into what we've been saying for a while, is that this spring could really reveal some good opportunities for buyers, whether you be upgrading, downsizing, or looking to potentially enter the investment market. Now, the other things that obviously influence what's going to happen within the property market is obviously interest rates. We don't like to take too much notice, or we like to look at what some of the predictions have been. They're not always accurate, but certainly looking at what the big four banks are saying and seeing what their interest rate predictions are looking like for the coming 6 to 12 months, perhaps even 18 months towards the end of 2025. And it seems at this stage that the sentiment appears that it's highly unlikely that we'll see a rise now this year, albeit that there potentially could be one if inflation does take a bit more of a jump again. There might be another rate rise, but consensus is that it'll most likely remain fairly stable. And then providing inflation can get back to that sort of 2 to 3% mark, which is obviously the Reserve Bank's target range, then the expectation is that interest rates might start to come down next year. And most of the banks, from what I'm reading, are suggesting that could be coming down to, the cash rate at the moment sits at 4.35%, but it's looking like that they're all four major banks are suggesting that by the time we get to the end of 2025, it could sit somewhere between 3 and 3.5%, which would obviously provide some good relief to property owners, which would be great. The other thing that certainly influenced the market, particularly from an investor's perspective, is the rental side of things. And I think some of the issues that investors are finding at the moment is the high costs that are coming in as a result of the Victorian government's new rental laws that they're introducing, which will kick in as of October 2025. And that's obviously seeking to improve conditions for renters, which I think is always a good thing. The things that it's going to include are requirement for ceiling insulation, air conditioning, draft proofing, so windows and doors to make sure that they're not getting drafts coming through and making properties energy inefficient. And then obviously improving efficiency around existing heating and hot water services, those sorts of things. Now, as I said, October 2025, so there's a bit of a lead-in time to that. But that's obviously going to lead to costs for investors to have to put onto their properties or factor them in if you're looking to buy into the investment market. And it might not seem like a great thing, and the state government suggested that it's only going to be as much as $5,000. But this is death by a thousand cuts for a lot of investors, and it's leading to more and more costs. And they're suggesting that it's not a big deal, but it is. And if you start adding air conditioning and these sorts of things, investors are going to pass that on and expect a higher rental return. So it is going to lead to even higher rental costs, and we'll get to the way the rental market's been heading over the past 18 months shortly. But when you combine these extra costs for investors with obviously the changes that occurred back in 2021 when there were further rental laws were upgraded. Obviously, the land tax that's kicked in this year, which has certainly increased for most investors, the higher interest rates that we keep having to consider, and then obviously the fact that the capital value side of things hasn't had significant growth over the past 2 to 3 years. All these things make it really difficult, and it makes it, you can understand why investors are having second thoughts, whether that be to retain a property or whether it be to actually enter the investment market in the first place. And that's probably part of the reason why we are actually seeing this year that significant lift in terms of supply of properties on the market, because there are a lot of investors that have decided to cut their losses and move on. So that leads to a reduction in supply in most instances of rental properties, but it leads to an increase in the supply of properties for sale, which obviously holds value growth back because there's a lot more choice from a buyer's perspective. So all of these factors come into play when influencing how the market is moving. As I said, when you look at rents, one of the big playing factors in that sector and how that might influence capital values is the vacancy rates. So that's not all doom and gloom, because the vacancy rates have actually been really, really low, which is great from an investor's point of view. I think what we've seen, and there's if you have a look at the blog that will obviously accompany the podcast, you can have a look at, we'll have a graph in there showing how the vacancy rates moved and obviously what the median rent figures have done for both units and for houses over the past 18 months. And it's quite interesting reading to see that really the vacancy rate has hovered around the sort of 1.2 to 1.5% mark. It's dropped as low as 1%, which was during that real peak rental period, typically around that January, February, March period, where it really gets tight because there's a lot of tenants around looking for properties. But it puts a lot of pressure on the rental market when vacancy rates are that low, and they're going to continue to be that low when there's not the incentive for investors to come back into the market. And that obviously leads to rental figures starting to increase. And over the past, just over the 18-month period from January 23, houses are up, according to the stats that we looked at, as much as 19%, and units are up 17% in terms of rental figures. So that's only going to continue to increase if there's not enough choice for tenants around and the supply is just not there. And if we look at, given the expectations for interest rates to fall next year, this actually might start if the rental figures continue to climb, the vacancy rate continues to be quite low, then you see interest rates come down, and rents start to continue to move. This might be the trigger that brings a few investors back into the market. They're certainly not there at the moment, and as I said before, most of them are leaving. But it could start to turn if these pressure points continue to go the way they have been. And so it's something that's really worth monitoring, and we're certainly keeping a close eye on that to determine whether or not we think that the market might start to turn, or that might be the trigger that starts to help kick it along. It's interesting because in the investor market at the moment, it's really been, or those types of properties, a lot of them are being bought up by first home buyers. So that's not a bad thing either, because a lot of first home buyers potentially have been renters. So it might mean that there's less demand in that space and it gets people into the property market. And we do tend to find over the years that investors and first home buyers are quite often competing for similar types of properties because they're good entry level properties into the market. So it is going to be a really interesting spring this year. I expect there to be some really good opportunities, buying opportunities for those that are out there into the market. But I think, as always, we always say this, but patience is absolutely the key. And I think asset selection in a time where there could be a lot of choice, you need to make sure that your asset selection is really spot on and you don't go just chasing bargains. So make sure that you're buying the right property for the right reasons. And the right reason usually isn't because it's the cheapest property that's available. It's because it's the right property that suits the purpose that you've ascertained before going out and hitting the market. So that's about it for today. Thanks very much for joining me for episode 82. Hopefully that's given you some good insights into what we're expecting for the spring market, and we'll keep an eye on that and obviously keep you updated with what we're seeing within the podcast. Please feel free to share the podcast far and wide with friends, family, colleagues. And obviously, if you'd like further information on how to make rewarding decisions, please visit our website, wakeland.com.au. And otherwise, we wish you all the best with your property decisions.